Good evening, traders. This is Daud from Elliott Wave Forecast.com. Welcome to another video blog about Aussie CAD from Elliott Wave Forecast.com. In this blog, we are going to take a look at the price action down from this February 2012 high in the Australian CAD. You can see that we have marked some numbers here. So these numbers basically represent the swings and not the Elliott waves. Okay, so let's get that clear from the get going because some people might get confused by seeing 6 and 7 here, which basically is representing a sequence. Okay, as you can see that this is an overlapping and a corrective decline here, clearly not impulsive. Okay, there's too much overlap and there's no separation here. So that is why we believe that this is a corrective sequence. And if we count the number of swings down from this peak here, we can see that we did a three-wave decline. We're counting that as swing one, then you had two, three, and then if you can check that you broke this RSI trend line, which means that this bounce here, it was a connector of the entire decline from the 2012 peak. We can obviously put RSI here on this chart and we can see that we broke the RSI trend line as well, which is suggesting that this was a connector of this entire move here. Okay, it is often represented by an X wave in Elliott wave terms. Okay, and then price went on to make a new low below this low of August 2015. All right, which makes it five swings down from this peak. One, two, three, four, five. As you can see, it suggests over here. So five, as this is a corrective sequence, so the corrective sequence runs in 3, 7, 11, 15, and so on, and an impulsive sequence runs in 5, 9, 13, 17, and so on. As this is a corrective decline because this is overlapping, okay. So that means 5 is an incomplete sequence, and that's why this sequence is calling for more downside in the Aussie CAD pair because 5 is incomplete. So if this is corrective, so 7 at least is the number that we need to complete the sequence. Obviously, after 7, it can do 8, 9, 10, 11 as well. But as we have 5 swings, it tells us that, we should be looking for at least one more swing to the downside. Okay, so we are looking for selling opportunities in the Australian dollar Canadian dollar pair. And currently we can see that it rallied from this low of October 2018 to this peak here. It pulled back. It was a sharp decline, did not break this low, and it has bounced again. And now in this blog, we will be looking at an area, where we are expecting the sellers to appear, from where it can resume this decline or pull back in three waves at least. We call it a no enemy area, or some people know it as the Elliott wave hedging because there both the buyers and sellers would agree in the direction of the next move for three swings at least. So if we drop down to the daily chart of Aussie CAD, this is basically the label chart here with the Elliott wave labels on it down from this 2016 high, which is this peak over here. All right, the red four. So you can see it is a corrective decline. This cycle ended. It was 1, 2, 3, 4, 5, 6, 7. This cycle has ended. Now this rally looks to be in five waves, followed by three-wave pullback. And now, as far as this low is in place, it can see this blue box between 98.26 to 102.42. And if reached, we believe that sellers will be waiting there. And then from there, it can resume the decline towards this 87.39 to 83.46 area, or worst case make a three-wave pullback at least from that blue box to allow the sellers in that blue box to get into a risk-free position. All right, so that's the invalidation level, the right side tag, and the bearish sequence because of the five. All right, so because of the five swings that you guys can see, so it tells us that we should be expecting more downside and using the rallies here as a selling opportunity. Now, obviously, instead of going straight up here, in case another possibility here can be that it still can make a bigger pullback here and then do something like this, or could even do seven swings from here. Let's say did a flat in the first leg, this is a connector, and then it can do a slightly bigger pullback and then just one more leg up. But that area highlights the extreme area, and if reached, we should see sellers appearing there, looking for new lows towards this extreme area to finish seven swings down from 2012 peak, or make a three-way pullback at least, which will allow the sellers to get into risk-free position by eliminating risk on the trade. So I hope you guys enjoyed this video about the swing sequence in the Aussie CAD and this area that we highlighted where we are expecting the sellers to appear. So thank you so much for watching. Take care. Enjoy the rest of your day. And for more videos and free chart updates, don't forget to bookmark our website and keep visiting. Thank you and take care.